Good afternoon, everyone. I welcome on behalf of the Women Member Excellence Committee of ICI to everyone, especially our renowned faculty CA Falguni Gandhi ma'am and Rajeshri Mundra ma'am. They will hopefully provide a very good insights on tax audit or the role of CFO. Further moving, it is my pleasure to welcome you all to Yashasvi, which is an Indian Idol Series 21. Yashaswini is a Wednesday series of program conducted by the WMEC for the Women CAs and by the Women CAs. This series is an extension of the Sky High Symposium, which concluded its 100th episode. It is one of the committee's initiative to not only to disseminate information to women members on technical updation and non-technical skills, but also to empower and inspire women members to come at forefront and realize their verbal skills at public forum. The driving force behind this remarkable initiative is CA Preeti Savla ma'am, who is not only the esteemed Central Council member of ICA, but also an independent director and chairs the WMAC and serves on the Board of Discipline. Internationally, she also represents India on the ISSB Sustainability Standard Advisory Forum and chairs the SAFA, that is SAFA Sustainability Board. With governance role in prominent companies like Sun Pharma and IRB Infrastructure, she also holds unique distinctions as India's first social auditor and contributes significantly to social impact initiatives through her role at the Institute of Social Auditors of India and Social Stock Exchange of BSE. It is unfortunate enough that Preeti ma'am has been busy in some meeting, so she will be joining us in a while. Until then, I would ask Ms. Rajeshri Mundra ma'am, who is a FCA, CS, DSA, and FAFP, which is a lot of degrees, who brings with us 22 years of experience in audit, taxation, and financial consultancy, with a notably 7 years in MNC and 15 years in a practice. She also holds a certificate in entrepreneurship from IIM Bangalore and is actively involved in education as a faculty member and career counselor. So, Rajeshri ma'am, stage is on you.
Thank you so much,
Yeah.
ma'am, for such a nice introduction. And good afternoon, everyone.
Good
And
afternoon, ma'am.
as all of you might be knowing, what is the topic we are going to do today? So 31st July was our due date for individual. And now we all will be just relaxing. But along with the relaxing, what is required is the proper planning. Yes. So planning for what? Yes. The next due date is coming on the way, 30th September. That is the due date for our tax audit. Now, what we have to do and all, I'm sure you might be doing the tax audit since a long time. But before I will proceed, we will just have a brief brush up of for whom it's applicable, what it is basically, and how we can go ahead. So along with the planning, a little bit, the way the ma'am has given my introduction, the same way I'm going to give you the introduction for the tax audit, a very brief. So tax audit, as we know, this one is the audit required so that the income tax can be computed properly. Now, income tax is on the income. Now, this will include many clauses which will decide either some of the income which we don't think it's an income has to be included. It may be deemed income, or some of the expenses which in generally we think will be allowable, which are not allowable. So this tax audit is basically a summary of all the expenses which are required as per the law, which are required to be allowed, or all the income which is required to be considered. So with this, we begin. One more thing, to whom it will be applicable. Tax audit can be applicable to anyone. It can be applicable to me. It can be applicable to you. But if it will be applicable to all, then it will not serve its purpose. So there is some limit on which, turnover limit I can say, on which it is applicable. Okay. So now what is this limit? As a CA, we all are professional. And there are the people who are carrying out the business. If the limit is going to be same, again, it will not serve the purpose, because if it's a trading entity, the turnover can be quite high. If we cannot compare the turnover of a trading entity with a professional, like doctors, CA, advocates, etc. So there is difference, there are different limit for a person carrying out the business and a person carrying out the profession. Okay. Now, let's try to understand it with the help of the PPT. So it will be a bit change from my face to a PPT. Today in this, we are going to learn about what is the objective, scope, recent amendments, issues, and detailed discussion. So objective, we all know, to assess the income properly, correctly, so that the computation of income will be correct and assessing officer can do it easily. As we know, a single assessing officer, it will be difficult for him to go and check each and everything. That's why we chartered accountant are there. One more thing, this tax audit can be done only by chartered accountants. For example, cooperative societies audit can be done by other auditor also. But for the tax audit, the nation relies only on chartered accountants. So it's we who can sign the tax audit report. Now, this one is different from the statutory audit. In the statutory audit, we express our opinion, whether it's true and fair. But over here, already the books of accounts are there. We express what is required to be reported on certain areas, whether it's admissible or no, whether the rule laws are complied or no. We'll know more about this as we'll progress. And ensure proper maintenance and correctness of the books of accounts, and to report on various provisions, income tax and other, all related with assessment of the income. Now, many times it's a bit confusion. What is going to be the tax audit limit? If I'm earning, if my turnover is 10 lakhs, if I'm a person who is running a business, if my turnover is of 10 lakhs, will the tax audit will be applicable to me or no? So for this, the limit is 1 crore. For any assessee who is running a business, the turnover limit for tax audit is 1 crore. Okay. Now, we all know about the presumptive income calculation. Now, what is it? This one is, this scheme is for the small assessees who can declare without keeping the books of maintain, can declare the income as a certain percentage. For example, if they are professional, 50% of their business receipt will be taxable under presumptive taxation scheme. Or if they are running a business, it will be 6% of the turnover or 8% of the turnover. Now, there are certain exceptions for the one who is running, who is into the business of the transport of more less than 10 vehicles, or if the person is an NRI. There are different sections for presumptive taxation. Okay? Yeah. So the basic turnover limit for application of the tax audit is 1 crore. Now the case comes, what about if I would like to go under presumptive taxation scheme, then what will be allowed? So here is the question. If you are a resident, you want to declare your income under section 44AD, your turnover limit will be 2 crores. Okay. Now, one more question comes. If my business is within, my turnover is within the limit, but if my profit is not as per the 6% or 8%, that means I want to opt out of this. I want to show my actual profit, which may be 1% or 2%. In this case, the tax audit becomes mandatory. Okay? And there's one more this. If your turnover, all the receipts, the total cash transaction is not more than 5%, then the turnover limit, this 1 crore will be 10 crore. So the basic exemption limit is 1 crore. And if these all are digital receipt or through banking mode, and your cash transaction will not exceed 5% of the total turnover, this limit will be 10 crore. If you want to adopt the presumptive taxation scheme, the limit will be 2 crores. Okay. Now, if you want to declare less than the presumptive taxation scheme, less than what is applicable in that is a 6%. If it is a turnover through banking mode or digital mode, or if it's the cash, it will be 8%. Now, if mine is less than that, as I told you, the tax audit will be applicable, but it is less than that, but the income is less than my basic exemption limit. That is a 2,50,000 in case of old regime and 3 lakhs in the case of new tax regime. Do I have to go for tax audit? The answer over here is only in section 44 AD, which is for the resident. This one is not required. If the total income which you are going to declare in presumptive taxation is less than your total basic exemption limit. Okay. Over here, we are not going to consider the rebate. It's the total basic exemption limit. I hope it's clear to all of you. Any doubt? You can always write down in the chat box, and we'll take all the questions at the end of the session. Okay. Okay. So now let's move to the next slide. Now, over here are some questions for you people. Okay. If the total sales turnover exceed rupees 1 crore in the financial year, then the tax audit will be applicable. Any one of you? The first answer, okay, I will only give. So it will be yes. But if the person wants to opt for presumptive taxation scheme, then he is not required. So just by looking at this question, only this much data is given. It's difficult. It will be both yes and no. Yes, when he will not be opting the presumptive taxation, and no, if he's opting the presumptive taxation, but his turnover does not exceed 2 crore. Okay. So whenever this type of information is there, we need to interpret, and we have to think from all point of angle. The same thing will be required when we are going to prepare the tax audit report. We have to see from each angle. And if the information is complete, we need to ask for the information. One more thing. Sometimes the management will tell us verbally, but if we are relying on any information which has been sought from the management, we need to take a management representation letter from them. Okay. And all of you know the importance of documentation, so no need to go in depth for that. Yeah. Now the second question. If cash transactions are up to 5% of total gross payments, the turnover is 5 crore. Will the tax audit will be applicable? I would like you also to put some more effort. So Amrita ma'am, what do you think? It's a test to know whether you are paying attention on what I'm saying or no. Amrita ma'am or Yamini ma'am?
Ma'am.
Yes, ma'am. So what do you think for the second tax audit will be applicable or no?
एक second.
In my presentation, I keep on asking the question. So it's a check whether you are paying attention on my lecture or no.
If cash transactions are up to 5%, right?
Yes.
So I believe no tax audit because 10 crores is the limit. So if they are up to 5% cash transactions, then I don't.
Thank you. I'm so much. I'm sorry for troubling you.
No
Okay.
worries, ma'am.
See, all the slides are not containing the question. This is only this slide. So next is for Yamini ma'am. Third question, if the total sales turnover rupees 1.5 crore in the financial year, opting for presumptive taxation, will the tax audit will be applicable or no? See, this I'm asking just so that the basic will be clear. And once it will be clear, the rest of the things will be very easy to understand, to grasp the things. Before we do anything, we need to know whether is it applicable or no. The same will be regarding all the clauses of the tax audit. First we need to see, is it applicable? If yes, then we have to go into deeper of that. Okay. So if the turnover is 1.5 crore, then Yamini ma'am, the third question. Sorry,
Yes, ma'am.
the third question. If
Ma'am,
the
I guess the turnover, if it is about 2 crores, then we can opt for this scheme, presumptive taxation, ma'am.
it's up to 2 crore. Yes. If it's
Yes,
up
ma'am. It is up to 2 crores. Sorry,
up
it's up to 2 crores. Then we can declare it under 8% scheme.
yeah, 8% or 6%, whichever is applicable.
6%, yes. 8% or 6%. Yes.
Yeah, very good. Right.
Thank you, ma'am.
Thank you. So fourth and fifth will be for me only then. Taxable income declared is below the limit. As I told you, if you want to declare below the limit, the tax audit will be applicable. But over here, there are two cases. If 44AE, okay, does not exceed the basic threshold limit and exceeds the basic threshold limit. Apart from section 44AD, it will not make any difference, whichever section it is. If you want to declare less than the specified limit, it will go for the audit. Now the fourth and fifth are same. So let us just change the fifth one for 44AD. Now 44AD, it will be different. If it does not exceed the basic threshold limit, that is if your individual is 2,50,000, then you need not go for tax audit. Okay. If it exceeds the basic threshold limit, then you need to go. So I hope it's clear now when the tax audit will be applicable. No. See, the 3CD is a common tax audit report along with the 3CA or 3CB. Now, 3CA will be applicable to entity which have been under audit in any other law. Okay. And 3CB will be the one apart from for whom the 3CA is applicable. So generally, if for all the companies, as in Companies Act, the statutory audit is a compulsion, it's a mandatory requirement, 3CA will be required to fill up. Whereas the individual firm, not LLP, but it will be 3CB. So if the entity is required to undergo any audit in any other law, it will be 3CA. And if not, it will be 3CB. Now, what is the basic difference in the 3CA? Because audit have been already conducted, so they can take help of the audit report. Whereas in the 3CB, there has not been any audit conducted. So they need to take extra care. This is simply information about the entity auditor and all. Then we will concentrate more on the Form 3CD. Form 3CD is a common form for both this. So for the tax audit report, it will be either 3CA-CD or 3CB-CD. Okay. CA-CB are the simple one page, and 3CD is the one in which we have to go into detail for the entity's business, expenditure, income, and other clauses. So we will concentrate more on 3CD. Now, we have two methods. Either we can go through all the format of the tax audit report and we can go one by one, or we can go through what are the recent amendment. As today's topic is issues and amendment. So let's concentrate first on the amendment, recent changes for which we have to be utmost careful. Then we will go through the total complete format of the tax audit. Okay. So what I will do first, we'll go through changes, how it's going to impact us while doing the audit. And then we will go through the important clauses. Third, we'll go through the complete tax audit report. Okay. Then fourth will be your question answer sessions. So I hope all of you will be ready with one or other question. Okay. So these are the clauses in which there have been some changes. Now what changes and what it's going to impact us? Since when the changes have been applicable? The notification had come on 5th March 24. So whichever report is prepared, tax audit report after March 24, whichever period it belongs, these changes will be applicable. Okay. Now, Section 8A, the company has opted for the special tax regime with lower tax rate. Now this is the same as the presumptive. No, it's same as the new tax regime and the old tax regime. Okay. But why the changes is that we'll see in details. Then 12. Okay. Then depreciation admissible, not admissible. Then amount admissible as deduction under section 35, 30D, 35D, etc. Then amount debited to profit and loss covered by the section 37(1). Amount inadmissible. Amount covered under section 43B. So this 21, 26, there has been a very little change. In 26, it is a, in 21, it's very little change, but let us know this in details. Okay. And clause 32 for loss or depreciation. Now, what changes are there? We'll just have a look in detail. There have been a new scheme for cooperative societies 115 BAE. As the new scheme comes, there have to be some changes in what is already, because we need to add that relevant section also. So this is a major change. Along with the other taxation 115 BA, BA, BAB, BAC, BAD, it's one more section, BAE. Now, if how it's going to impact us? There will be this is a new tax regime in which the flat tax will be applicable of 15%. At the same time, there will be many allowances which will be not allowed. As we know, in individual taxation, if we opt for the new tax regime, certain deductions under Chapter 6A are not allowed. Okay. Even from the salary also, profession tax is not allowed. Same way for the companies also, certain deductions which they can claim in the old tax regime will not be allowed. So, and this from this Finance Act 23, they have started this new scheme 115 BAE. So this is added for the clause 8A, where it will be included the resident cooperative societies. Now, once it is done, what is our liability then? We need to check whether the company, the cooperative society is going to opt for this section or no. If yes, whether the entity has filed the form 10IFA, yes or no. So first thing, whether it wants to opt for the 115BAE. If it is answer is no, the question is, the reporting is ended. No. But if the question is yes, whether they have filed the form or no. And if they have filed the form, then they need to check it. If no, are they going to file the form and when? Okay. So this all detail you have to do. So whatever is the case, whatever is the fact, the auditor has to mention in the report. If they have not filed, they can he can write it down. They have not yet filed, but they are going to opt it for this. Now again, over here you need the management's confirmation. Just by verbal things will not serve the purpose. So you have to see that you get a written confirmation from the management that they are going to opt for the new scheme and they are going to file the form within the due date. Now, if the person is opting for the new regime, certain deductions will not be allowed. For example, additional depreciation on plant and machinery, this will not be allowed if you are opting for the new tax regime. So this is the clause which will impact your further proceeding. Okay? And one more thing, it doesn't mean that if you're going to opt for the new scheme, you are not going to check in detail the other clauses. You need to check, but amount admissible will be nil. Okay. So it will be that you have to thoroughly check everything. In one column, the amount admissible, which will be not applicable or nil, because it's going to offer the new tax regime. Okay. So this is all for the section 8A changes. Now, coming to the clause 12. It has to report for the presumptive taxation. So earlier it was 44 AD, AE, AF, B, BB, BBA, BBB, etc. Now 44 ADA has been inserted. Now, tell me, will it make any difference? So professionals have been also included in this. Will it make any difference? Yes, because now the professionals are also included. But does it mean that earlier it was not allowed to report if they opted for under 44 ADA? No. If you will pay attention, see, it was written that first schedule or any other relevant section. So earlier we used to report 44 ADA under any other relevant section. So basically it will not make much difference in your working because earlier also you used to report in any other relevant section. And now specifically this section is that. Okay? So as far as our work is concerned, it's going to be same. There's no difference in our work. Okay? I hope I'm clear. Now coming clause 18, which require the adjustment made to the WDV. Now, the same way it was as a new scheme have been introduced, whenever there have been any changes, so one time adjustment is allowed in the assets, fixed assets. So the same thing they have included. Earlier it was up to financial year 2020, assessment year 2021, then 21, 22. Now, because it's the one time, so it will be up to 24, 25. The same have been included. So this one is in line with the amendment of section 115 BAC. The only what has been inserted is for assessment year 24-25. So 2021, 21-22 separately, and the third proviso, it will be for the assessment year 24-25. Whenever a entity wants to opt from old tax regime to the new one, certain one-time adjustment they are allowed to make. And as an auditor, we need to report what is the how much adjustment have been made, what is the nature of that, in which assets, what is the total amount of that appreciation, etc. Now, as I told you, if you want to opt for the new tax regime, again, certain additional depreciation or additional deductions will not be allowed. Okay, so this and this earlier there was no reference for section 35A(b)(a). Telecom companies, we know, they need to pay a hefty sum for acquiring the right to use the spectrum. Now, this one is a capital expenditure, capital asset expenditure. But this is allowed on the life of the use of the spectrum. A certain year, the way depreciation is calculated the same way, this one be allowed to debit the profit and loss account. Okay. So from depreciation, this expenditure can be debited to revenue account. So this is the one. Earlier, this one was not included for the telecom companies. The same have been amended and included. Okay. This one was much more needed to make it clear so that future litigation can be minimized. Now, this one is a clause 21, very interesting clause. The tax auditor to see. We all know that fine or penalty are not a deductible expenditure. Same thing, there have been made some changes and the responsibility of the auditor have been increased. Now we have to be much more alert. It's in India as well as now it will be outside India also. And a certain new clause have been inserted. New subclause have been inserted. That is the 9. So earlier, if we will just go through the pre-amended clause and the amended clause, it will be much more easy for us to understand what it is and where the changes have been made. Otherwise, as an auditor, we know everything. So we simply, it's there in the mind. I'll just share one of my experience with you. I have seen the checklist of the company. The checklist was very good, but instead of GST, they were continuing with the excise duty. Not now, it's been 3-4 years. So it's like they're doing it properly, but then we are so used to it, doesn't come to our mind that it has been changed to GST. Earlier it was excise duty, now it has been changed to GST. Or Octa and all, they keep on writing the same thing. Okay. So this is sorry. So 6, 7, 8. Now in this 6 and 8 have been combined. Now what it says, any penalty, any fine for violation of law for the thing which is prohibited in India or outside. Okay. So the pre-amended 6 and 8 have been combined and it has been included in only 6. A new entry, the 8 clause, subclause 8 is the new entry. What it says, expenditure incurred to compound an offense under any law for the time being in force in India or outside India. So we have to check, is there any fine or any money we have paid outside India for violation of any law? This all will be inadmissible. Along with this fine penalty, there is one more new entry, that is 9. expenditure incurred for any purpose which is an offense or which is prohibited. This have been substituted with the word in whatever way benefit benefit or purchased by such person is in violation of any law or rule or regulation. It means that if you want to give something some money as for doing the ease of business, it's not allowed. If it's prohibited by the law, it's not allowed. Okay. Now the responsibility of the tax auditor have been increased manifold. They have to see whether it's in India, outside India, or any sum which have been debited to profit and loss account. Now, one thing is that if it is not debited to profit and loss account, if it is not debited, then we won't come to know and we need not go and dig it. Okay. But yes, if they have changed the name or something, we have to check it properly. Okay. If an entity has paid, but they have not shown it anywhere, that means it's outside our purview. But if they have paid and have shown by some other name, it's our duty to find it out and to comment on that. To write down, to write in detail what is the amount, to whom it is paid, when it was paid, date, amount, quantify, what was the reason, under which act, and all. So these are the amendment. Now 21B, as I told you, there is nothing much. It was a simple clerical error which have been corrected now. Earlier, if you'll see, it was in the word, if you'll see the fourth one, it was name and address of the payer. Now, payer is the one for whom we are preparing this report. So they have corrected this with the name payee, right? To whom we are going to make the payment. The entity has made the payment. Payer is going to be same for everything. So this will be for the pay. Date of payment, amount of the payment, nature, name and address of the pay, amount of TDS. So there is nothing much to say into this, but we need to report that. For each pay, we have to report. Now, over here also, along with 115BAD, 115BAE is also inserted. Okay. So this is the, as I told you, this is the new scheme which has to be inserted in everywhere. The same thing as we have seen for the depreciation, it was written. Same thing, it's there in the clause 32 also. Okay. Now, these were the recent changes, the new amendments from 5th March 2024. So now we'll see what have been the other changes or important clauses which we have to pay attention. So many times we are more bothered about which expenses will be admissible or which are not allowed. So will this important things or which income we have to show, for example, duty drawback or certain escalation clause income, which was not given earlier, which have to be included in this. So quickly we'll go through all the important clauses. Okay. I'm not running you through the total format because as we all know, we have multiple time we have done this. But wherever it's important clauses, wherever we have to, there's some scope of ambiguity or there may be different interpretation. I have taken those clauses or where we have to be much more careful. If you have any doubt, you can ask me at the end of the session, not in between. Now let me quickly go through all this. You all are ready for my questions? Now clause 12. Many times an assessee, he is running a business or multiple businesses in which some of the business he want, if one business he wants to claim under presumptive taxation and the other business will be normal business. So is it allowed? Yes, he can do that. In that case, the limit will be applicable separately for both this. Okay. Now, if it's a presumptive business, we know that the books of accounts is not a mandatory requirement to keep. No, it's not a mandatory requirement to keep, but if the assessor is keeping it well, good enough. Very convenient for us because easily we'll be able to find out how much is the profit belonging to the normal turnover and how much is the profit belonging to presumptive taxation or expenses. Whatever are the expenses, how they have apportioned. If it's written separately, it's easy, right? But if he is not maintaining or if he's maintaining only single set of books, then everything, all the expenses he's putting into this in the normal business because he has only one set. So in this, we have to find out a way which will apportion the expenses for the presumptive business. Okay. For this, also, it has to be in line with the management decision. If you don't have enough information, then you can simply write it down. You can comment in the same way that it's difficult to apportion the expenses. If the management has done it in the right way or adopted some method, turnover method or any other, you can write down the same thing. You need to check whether the method employed by the management is correct. If yes, you need to comment on that. Okay? And if you are not able to find out at all, then the same thing you have to write it down. So this, you have to pay attention. Is there only one business, single business? There are multiple business. Are the books are separate books, set of books have been kept? If yes, good enough. If no, then you have to see, is there any way to apportion the expenses or what the management is doing to find out the correct profit and loss. Okay. Next important one is the clause 17. No. This one is related with the transfer of land or property. This is applicable even if when the land or property is considered as a stock in trade. A real estate, many times we have seen that the transfer takes place at a value which is much more lower than the fair market value. Now over here, how we are going to assess and how how are we going to assess and what is going to be the impact? So this is basically capital asset, or if it's a stock in trade, then the inventory. Let us talk about capital asset. It will be the applicable section will be 50C and 43CA will be the one for whom it's the trade. Now, over here, what we have to do? First, we have to find out what is stamp duty value. This we can get from the index 1 of the sale agreement. So we need to check the agreement, the purchase value, what is the purchase value of the property, what is the fair market value, what is the agreement, sale agreement value of the property. If the agreement value of the property is higher than the stamp duty, that means it's higher than the fair market value. Then we don't have to report anything. But if it is lower, then the difference between that will be deemed income. So for that, we have to consider the stamp duty value. Remember clearly, if the actual sale value is higher than the stamp duty value, we don't have to do anything. But if the sale value is less than the stamp value, then we need to commit. We need to report that by giving all the information. Detail of the property, consideration received or accrued, value adopted or assessed or assessable. Okay. This also we have to take care. Any gain is arising, is it correct or no? How will we do that? By finding out what is the sale value and the stamp duty value. Okay. As a tax auditor, it's our responsibility to correctly assess all the clauses so that the correct income tax computation is done. Okay? Now comes the clause 20. So it's about the amount paid to employees as bonus and commission. Now, over there are certain things. See, this will be deductible only when it is paid in relation with services. If it is paid as a distributed dividend, it will not be admissible. Okay? If it is paid purely for his services rendered, it will be deductible. But when it may be outstanding liability at the end of the year, financial year. But if it is paid before the due date for filing of the income tax return, okay, then it is allowed. It can be deductible. Now there are three other things which we'll see afterwards. This is about the bonus and commission. If it is related with the services rendered, it's deductible. First thing. If it is not related with that, if it is as a distribution of the profit, it will not be deductible. Second thing, if it is it will be deductible. But if it is paid, then only it will be deductible. If it is not paid, it will not be deductible. Okay. And first thing is that. The second thing, details of the contribution received from employees for various fund. We know if the salaried person is there, we deduct the certain percentage for paying to PF, ESI, pension fund, etc. Same time, it's employees' contribution as well as employers' contribution. Now we are talking about only employees' contribution over here. Employees' contribution will be deductible? Yes, of course, but only if it is paid within the due date of the payment. If the March salary, and so the due date, if the due date is 15th of the April, if it is paid before or on that day, it will be deductible. If it is paid after that, but before filing the tax return, employees' contribution will not be deductible. See the difference between the employees' contribution and employers' contribution. Employers' contribution will be deductible if it is paid before filing of the income tax return. And employees' contribution will be deductible, admissible amount, only if it is paid within the due date of the payment. Got the difference? Why the reason? The employer's fund is his own response, but employee's fund, he has taken it from employees and he has not paid within the due date. See? So to discourage this habit, this section is this clause is 20. But always remember employer's contribution and employee's contribution. For employee's contribution, it has to be within the due date of the payment. Whereas for the employer, it will be before filing of the tax return. Okay. Same way, this one is the clause 21 says, if any amount is debited to profit and loss being in the nature of the capital, personal, advertisement, expenditure, etc. Now, capital expenses should not be debited. It has to be capitalized. And certain advertisement expenditure, if it's in relation with the political party and all, it will be disallowed. Personal expenses disallowed. Okay. So this is a section which will pay attention on. We need to scrutinize all the expenses. See, it's very easy to show the expenses. So we have to see the authenticity of these expenses. Is it allowed? Is it incurred with in relation with the business? If yes, is it allowed or no? Okay. So personal expenses, first sense, disallowed. Advertisement expenditure, we have to check. Is it related with the business or no? If yes, then how they have done the advertisement. If it is in the way of any political party involvement or making brochure and for that, not allowed. Again, TDS is an important part. Now, over here, if we are liable to make payment to a NRI, so for NRI, we need on certain payment to NRI, there are TDS. If we have not deducted the TDS, then the total amount paid to NRI will be disallowed. Okay. If we are not deducted, if we have deducted the TDS but we have not paid, still it will not be allowed. The total amount will be disallowed. So remember, if any payment is made to NRI, please check properly. If TDS has been deducted, if no, disallow. If it is deducted, then please check, is it paid or no? If not paid, disallow. Same way for the resident, but over here it will be partially disallowance. In section 40A, for NRI, it will be 100% disallowance. So it will not make any difference whether you have deducted or not. Okay. You need to see whether you have paid it or not. Okay. Now it's coming to resident. If you have deducted the same, if you have not deducted the TDS, 30% will be disallowed. If you have deducted but not paid, 30% will be disallowed. Okay. Now, what the clause 21C says, it says certain amount debited to profit and loss, being interest, salary, bonus, commission, inadmissible. Now, why it will be inadmissible? This will be applicable to firm AOP BOI. This will be inadmissible if it is not incommensurate with the size of the business. Many times a firm, it will give additional salary, bonus, commission, etc. So if it is not incommensurate with the business of the firm, it may be disallowed. Now there is, see, so generally if it is paid just as it's paid at a fair rate, it will be allowed. But if it is paid at exorbitant rate, it will be disallowed. Now, again 48.3, if we are to discourage the cash transactions, if the expenditure have been made in any other mode, about 20,000, this will be disallowed. Same way, if any sum is paid by the assessee as an employer, not allowable. Why it will not be allowed? The provision will not be allowed. You need to pay it. Okay. So the gratuity also, if only you are making the provision, it will not be allowed in the profit and loss account. You have to make the payment. Just check how much time is done. Okay, I have 5 minutes, so I'll quickly run through this. Interest. Many times the interest, if we have borrowed a loan for a capital asset and we have not, we need to pay it, interest we need to pay, but then asset cannot put to use. This amount will not be allowed as a deduction. It has to be capitalized. Okay, so this is clause 21. Then MSME, which is very important. If you have not paid the MSME within the agreed date or within the due date, that is the 45 days, the interest payable will be 3 times of the bank loan rate. Now, this interest will not be allowed in any case. So, please check. How will you check? You need to see whom the interest has been paid. If the interest has been paid, whether they are MSME. If yes, it's not allowed. So, you need to check the vendor list. Okay. Same way, if you are paying to related party, if you are paying just to avoid the income tax, it's not allowed. Clause 23. The clause 22 is also very important. Please pay attention on this. Now, there are some of the liability which may exist in the previous year. Now, this liability, if it is existing on the previous year, if it is paid during the year, it will be allowed. But if it is not paid or if it was existing on the first day, but it belongs to some other year, in which year it has been, the deduction have been allowed, then this year, although you have paid it, it will not be allowed. See, the companies are by default required to follow the mercantile law, but still for calculation, some of the expenditure, liability, which is not paid will not be allowed. Okay. Now, the same way, you have to give the details, whether it was incurred in the previous year and paid before the due date of filing the return. Nature of the liability, detail you have to give under which law, etc. Okay. This one is also the same. I think we are running short of the time, so I'll just quickly do this. If the liability has been incurred and paid during the year, it will be allowed. Okay. Now, which type of liability? It may be any contingent liability which have become a liability during the year. Then it will be allowed if it belongs to the expenses and the continuing the business. But if a liability was not existing, and if you have for which the deduction has been allowed in any of the previous year, which paid during the year, it will not be allowed. Okay. This will be mainly with the litigations and on. Now, this is a clause 44, which is the end of the tax audit report. Now, over here, GST, the total expenditure we have to reconcile. In this, we have to first tell whether it is from the registered dealer or unregistered dealer. If it is from the registered dealer, whether it is exempted, is it under composition scheme, or it is under nil tax rate, or so. And how much is the total amount expenditure related to the entities not registered under GST? So what we have to do, first thing, we have to pay attention. Is it registered or unregistered? Then second thing, we have to, if it is registered, is it under the composition scheme or the exempt good or the nil tax rate? And this should be reconciled with the total expenditure. So this is the one, clause 44. And these are the important one. Apart from this, well, all the clauses are important for in the tax audit, but because of the constraint of time, I could not take each and every clause. So I concentrated more on the clauses and the recent amendment. So I'll hand over now. If you have any question answers, we can take it up.
Yeah, Hiloni Gala, ma'am, are you online?
Yes, ma'am. Yes, ma'am.
Yeah, can you take up the question now, ma'am, received from the participant?
Just a second. Am I audible now?
Yes, ma'am.
Hello.
Yes, ma'am, you carry on.
So
You are
first
audible.
question. Yes, yes. First question is whether tax audit is required for even small amount of FO loss, and the turnover is 5 crore.
Now for FNO, it's different.
Please.
This, hello.
Okay.
For
Yes, yes.
FNO, you have to consider the total receipt and total payment. The difference between profit and loss will be added. So it will be if you are incurring 1 lakh profit and if you are incurring 1 lakh loss, it will be 1 plus 1, 2 lakhs. So this will be your turnover. Okay. So depending upon be applicable or no on that. The speculation business. So the turnover limit will be 1 crore, but over here it will be total receipt and total payment, which will be, there's a total profit and total loss will be added. So that will form your turnover.
Okay, so next query is she was having a query about turnover limit. So is audit applicable when net income is exemption limit, no matter how small turnover is? So is tax audit applicable for for all loss cases?
Huh? You are not audible. Yeah.
Hello.
You're not audible. Hello.
Hello.
Yeah, can you?
Hello.
Hello, due to back.
Am I audible now?
Can you please repeat the question?
Yes, sure. So the question is, it is all about turnover limit.
Yes.
Hello.
Yeah, yeah. What is the question?
So it is about turnover limit. So is audit applicable when net income is less than the basic exemption limit, no matter how small business is? And is tax audit applicable for loss cases?
See, again, it will be upon the turnover. Yes. See, if it is it's a small business. If it is a loss, as I told you, it depends upon the turnover. If you want to show less than presumptive, it will be applicable, otherwise no. Now, if you are saying the small business is there, suppose 10 lakhs only, if business is there, with exemption limit, the turnover limit is not crossing, it will not be applicable. But yes, in certain cases, if you want to carry forward the loss, which would not have been allowed, then you need to carry out the tax audit to ascertain the loss carry forward. Now, just this much information is not enough for me to understand whether the tax audit is applicable or
Okay. So the next question is, NRI, it is from Abu Dhabi. So the participant is from Abu Dhabi. So her question is, NRI individual showing trading income on securities earned in India, say 1.95 crores, and
yes,
bank interest, then like that is there in income from other sources, right? And income from house property. So total,
yes,
if more than 2 crores, so what will be the limit? Like, is tax audit applicable or not?
yes, it will be applicable.
So do we need to add bank interest and house property income in the turnover?
See, for the NRI is different. So your total taxable limit for NRI, the limit is different. 1.95, you are saying whenever the business is 1 crore, the tax audit will be applicable. It was only for the presumptive this much. You got it? For the presumptive value of 2 crore.
Okay,
Once it will
okay.
cross the limit of 1
And
crore, the audit will
another,
be applicable.
okay. And one more question is there, ma'am. Hello.
Yes,
Am I audible?
yes, yes, you are audible.
Another question is, so if two businesses are there, how
Yes.
can we calculate turnover limit? So one crore for normal and 2 crore for presumptive separately, or 3 crore in total? So overall,
No, if we are
will it
doing
be
presumptive, it will be, you can consider it separately. But if there are multiple businesses under presumptive income, then it will be combined amount. Yeah, if there are separate
okay?
business, the limit will be applicable.
Okay.
Okay,
One
Hiloni,
more question.
yeah, I thought actually I'm exceeding the
Can
time, so I was just worried.
can last question.
Yeah, yeah,
Section 40A, payment to NRI disallowed if tax is not deducted.
yeah, right,
So the
correct.
question is, can assessee claim if full tax is paid by NRI and proof submitted by NRI to assessee? Should then be mentioned.
No,
Should
no. See, now this one is a liability for TDS not deducting. Now, whether the NRE has paid the full tax, it will not reduce the liability of the entity, the pair,
okay,
right?
okay,
So even if you submit
right,
the
right,
proof, it will be dissolved.
okay. So the onus is on the taxpayer, right? To deduct the tax.
It is a payer, not paying.
हाँ यानी payer, taxpayer. I said taxpayer, like
Taxpayer,
the
what
pay.
I'm saying, you mean to say that if the payer paid the tax, whether he pays in times or no, it's a different thing. This one is
Yes.
while paying the amount, he is supposed to pay. Okay.
So, uh, that's all. That's all for the questions and question answer session. So I would like to offer vote of thanks. I'm like we are honored to extend our heartfelt vote of thanks to our speaker Rajeshri ma'am for her session on tax audit updates and issues. So we deeply appreciate the time and efforts you dedicated to this presentation and preparation. On behalf of everyone here, thank you for sharing your knowledge and addressing our queries so effectively. Thank you, ma'am.
Thank you so much for giving me the opportunity. Thank you, ICI, and thank you, everyone. Thank you, listeners,
Uh,
and asking the questions. Thank you.
yes, yes. So over to Shweta, ma'am. So you take over the charge. Shweta, ma'am.
Sweta
Hello,
Oza, ma'am, are you there?
am I audible? Hello,
Yes, ma'am. You please start the second
hello.
session, yeah.
Can you hear me?
Yeah, you are audible, ma'am.
Hello.
Ma'am, you please start with the introduction of second speaker.
Yeah, am I audible? That's what I was asking.
Yes, you're
ma'am.
audible.
Okay, okay. Thank you. Yeah. So the second speaker for today is Miss Falguni. Profile of Miss Falguni. So I am honored to introduce her. CA Falguni Gandhi is a seasoned finance leader with over 20 years of experience, recognized with multiple industry awards. She founded CFO Focus Advisory Service, creating key employment opportunities for aspiring chartered accountants. Being an alumnus of IIM Calcutta's CFO program, Ms. Falguni also is also incubated by IIM Bangalore and honored by Goldman Sachs as one of the top 10,000 women entrepreneurs. I think we have a lot of inspiration and learning from Ms. Falguni. So I hereby hand over the stage now to Ms. Falguni. Falguni ma'am, please.
Good afternoon. Very good afternoon. Thank you. Thank you, Shweta, for introducing me. I'm really thankful to everybody on the panel of Yashashvi, the entire committee members, and Preeti Saula, Kemakshi Soni, Choksi, and all the panel members for giving me this opportunity today to present to a wonderful audience of women. And I'm so thrilled and glad to see so many women at the when we qualified, the women force was so less, and now there are so many qualified chartered accountants who are women. So it's a very inspirational moment for me also to address this forum of Yashashvi series, especially for women chartered accountants. And I also welcome the male members who are there on this forum as well. But because it is of Yashashvi, I would like to present few slides specifically on women. So please excuse me on that. I'm sharing my screen. So I'll start with, so much of everybody is so excited to know about, CFO, the critical role of CFO in the changing landscape. Sorry.
Hello everyone. Hi Falguni madam.
Hello, Preeti. How are you doing? Very
I'm
good
good.
afternoon, and thank you for giving me this opportunity to present in the Woman Yashashvi series. It is a very privileged moment for me.
welcome, and I'm really happy that we are involving more and more women members as a speakers and as a moderators, and with this Yashaswini and successful women and idol, right? We have today Falguni Gandhi. She will be taking us through the journey as a CFO. What a chartered accountant can contribute towards that, and tax audit being the season of the year, this August has now already arrived. So Rajeshri has already taken up the session on the issues in tax audits, which is very, very important to upgrade and refresh our all the workings which we are doing for filing the tax audits for our clients. And with that, we have very committed our moderators. I can see Yamini, Hiloni, Amrita, Shweta, and everyone. So welcome all of you and my all beautiful, intelligent women participants. It is my endeavor to serve the best to my entire fraternity of women chartered accountants. And friends, we had very successful Falcon series going on physical mode also. And now we have one more Falcon CA Women Leadership Conclave, which is happening on Saturday at Thane. So I invite all of you to join this Falcon 4.0 on this Saturday at Thane. Again, we have already relaunched our portal for work time, for part-time and part-time and flexi hours working. This is also available for practicing chartered accountants, females. Even they have the COP. They can get the work on assignment basis from the various other firms. And these are our various initiatives along with our completed initiatives of Sky High Symposiums and Unleash Your Potential, which series is already there on our portal. So anytime anyone can go through this. And I thank all my dear coordinators as well as speakers and participants for joining this uh, webinar. Along with that, I also request if you have any suggestion, please feel free to share with us so that we can take it further, which will help all my dear members and entire fraternity. Thank you and welcome all of you.
Thank you, Preeti. Thank you. And it is so
Thank you,
nice to
ma'am.
see that you are also attending this. So,
Thank
good
you,
afternoon,
Preeti.
everyone. Once again, I start my series. Should I start?
Yes, Falguni ma'am, please. Thank you.
Thank
We are
you.
looking
Thank you.
forward to your session.
Okay.
Yeah.
So, good afternoon, everybody. Today, a very interesting, as Preeti ma'am was mentioning about CFO role. Everybody is very excited to, understand in the current dynamic, especially after post-pandemic, the challenges that have thrown up. It is very, very critical to understand the changing dynamics of a CFO. So I would like to present to you all about virtual CFO services as well as the chartered accountants in practice. I know both of you all have joined, so I would want to make it useful to all the audience that is joining me. Are you all able to see my PPT?
Yes, ma'am.
Maybe we can, yeah.
So, the role of a chartered accountant, how critical it is, and specifically in the changing landscape, when everything around us is changing, the way we are acquiring customers in the business, or the way we are, procuring our material, or the way we are doing our business dynamics. The B2B people have moved to B2C, direct to customers. So everything around us, including the technology challenges, lots of things have amidst a lot of changes, and that has thrown up a lot of opportunities also on professionals like us to keep up the space, and in this changing dynamics, give our output as a professional. So I would say that there are a lot of challenges, but they are throwing a lot of opportunities on us. So I would like you to take you through the journey of how a CFO has changed, and you all can also tell me your views. I would love to hear them. So once again, greetings to all of you wonderpreneurs. All women, I want to call them wonderpreneurs because a woman word is in itself so inspiring, and you are a professional, so that gives an additional boost to say that you are kind of complete in all aspects. Whether you are working, whether you are not working, does not matter. How much you are contributing, do not try to assess yourself. I would say that try to give yourself a fair opportunity all the times. In this session, I'm going to cover what is the journey of a professional woman as an entrepreneur, leader, and wonderpreneur, and then communication and presentation, how this is so critical as a prerequisite when we are looking out for a senior professional role like a chief financial officer. How communication and presentation becomes so much of a prerequisite. Also, I would be taking you through the chief financial officer word and its advisory services, what all it encompasses. The CFO advisory, I get a lot of questions from everybody that, you know, uh, many aspiring chartered accountants who are in practice say that, even we are offering CFO advisory service. How do we get clients? We want to be in this space. So there is a definition. The CFO advisory is same as a CA practice. So I would like to throw upon you all certain kind of, key critical inputs which would allow you all to assess and understand the requirements of a CFO advisory. Then earlier we had traditional responsibilities of the CFO, how it is changing. So I've tried to cover that, articulating the role of a CFO services in business and impact to all stakeholders and landscape of opportunity, portrait of the future CFO, how the CFO space is evolving, sustainable finance and role of CFO, emerging responsibilities of a CFO, and case studies and question and answers. I will see, because I think we have already got on 10 minutes ahead. So I would see how much time would be left. I'll try to do my best justice. So what as a wonderpreneur is, why did I treat women as a very special category? Is that a woman in its own life and life's journey presents so many avatar. She has a family avatar, she has a professional avatar, she has a social avatar, she has a public avatar. So, it is not less than a Durga Ma image, which you has so many hands and is doing so many multitasking. So that's where woman's power is coming into picture. And I would like to assure you all in your life's journey that once a CA is always a CA. So even if how many ever breaks you have had in your career or you're going through a break, does not matter. And whenever you want to get back in the profession, you have to do few steps which are important to get back in the professional world, and you will find yourself perfectly fine. So do not strain yourself in that. Now, when as a woman you are doing multiple roles, what you are expected in a in a professional avatar is that, you know try there are certain norms for women that, they would be late, or they would not be a professional, or they would not stick to their focus area. So I would say that do a lot of studies, do a lot of research before you go to meet somebody, before you are talking on any topic, before you are pitching to somebody. And also you try to ensure that your all other avatars are getting synced into each other. When those avatars are not synced, somewhere it will reflect in your professional avatar also. So you all guys already, all ladies must be doing it very well, but I just thought that this was a very important part of struggle that we all go through. And if you try to sync all your avatars together, I think that it should be perfectly fine. And as a trait of a CFO, leadership is so important. Okay, you're talking about a very senior C-suite kind of a role. Whether you are doing a CFO for a small company or a big company does not matter. Your thinking has to be, your ability of thinking has to be very high. And for that, there has to be traits of leadership. Okay, there has to be ability to think strategically, analyze the problems critically, handle conflicts, manage changes, be flexible, Be a smart negotiator. Be a good CFO collaborator. What does a collaborator do? What does a woman do in her home? She tries to bring in all the resources what she has in sync with each other and try to take charge and control of everything, including the budgets. A CFO is now not restricted in a company only to budgets. It is a very collaborative role with the marketing, with the business head, with the salespeople, with the technology head, with lots of other subsection heads, and it's kind of a collaborative role to ensure that it is a co-creator in the business along with the person who is driving the business. So a co-creator is very important. Please remember that. Also, there's an art of communication. Friends, communication is so very important that, you know, I know, you will say that communication is a very simple topic. I mean, in a CFO forum, why am I talking about communication? But, the art of communication, the language of leadership is so very important in a role of a CFO that it kind of distinguishes you between what a ordinary person in the company is and what a CFO, effective CFO is. So communication is very important. Specifically, when I say communication, it is not only verbal communication. Whatever you are presenting, your presentation skills, whatever you're presenting to your um, company or your clients or your effective presentation skills are so crucial to make you successful. So are you, presenting on by way of a real-time analytic dashboard? Are you putting various risk scenario analysis in an effective way? Are you communicating through various transformatory communication modes that are available right now? As I told you, a real-time analytic dashboard. What is it? If you have certain key changes, the dashboard also changes. So it's not like a static dashboard. So you can show various options to your company when you're working in a company also. So strategically transforming the raw numbers into strategic direction is so very important. Okay, we have all gone ahead now of the terms of generating reports. Now, the raw data should reflect the dynamics of your decision making. And how does that happen? In the journey, you're using the raw data to slice so many kind of transformational results, which will give you a strategic direction. So as we go ahead of my PPT, you will get more and more of what all I'm talking about. But what I want to say is communication is very non-negotiable in a CFO. How you communicate, how you put up yourself. You will say that communication, Falguni, is, in all other professions also communication is important. All other roles also communication is important. But I would say that in case of a CFO who's a co-creator of a business, whether you are doing a job or whether you are in practice, how do you effectively communicate the same thing to the other person? Okay, that very much distinguishes you from being a ordinary person or being a CFO. And the success of your presentation will be judged not by your knowledge. So, we CAs are very fantastic in our knowledge. I think, all our fraternity, nobody has to establish that, the degree itself is so soundproof that I don't think that once you tell somebody a CA, somebody will question you on your knowledge, because he or she would have presumed that there is a certain kind of knowledge already there, which is a very fair amount, better than anybody else in that forum. But is the knowledge only enough? The presentation will judge you, the other person, and whether what the listener is receiving is what it is perceiving. So this is where I wanted to just emphasize and bring you all to the word chief officer and its advisory services. So
the role of CFO has changed dramatically. CFOs were supposed to be experts in accounting and finance. Now, in dynamic environments, they are expected to be experts in strategy as well. You need it first that can help you to become a better CFO. The ability to become more engaged in financial matters with our company was
So what he's trying to say is that the role of a CFO has become very dynamic in the dynamic world. We are running out of time, so I can't show you all the entire video. But what I'm trying to say is that a role of a CFO is, a very dynamic. And most of y'all have the question. Can you also open the question? So, how the chief financial officer is distinct from a practicing CA? I think most of y'all have this question. So I would like to tell you all that, while you tell yourself that I'm here for, giving CFO advisory services, and you all are posing question as to how to get a client, how do I go ahead in that? But a CA practitioner is majorly coming into picture when the financial activity is already done. So, you as a practicing chartered accountant is so used to coming into picture when the actual activity is done and you're coming for auditing, or you're coming for tax planning, or you're coming for any specific questions. So the connection is very periodical. The visibility of the business matrix is not there. You're too much on the regulatory and statutory side, which is also very, very critical in the complex regulatory environment. A good chartered accountant is a very backbone of the company because it's giving a regulatory compliance, risk compliance kind of a protection, and it's able to ensure that the sanity of the numbers and everything is instinct. So that's a very, very important and critical role. But when we are talking about a CFO is somebody who is having a key business matrix in its head. That key business matrix is very important to get visible. When I say key business matrix, can some of you all tell me what that implies, like the key matrix? Unfortunately, I can't see what you all are writing, but what is it that the key business matrix will do? The key business matrix means that any company, how are you measuring it? How are you measuring the performance? How are you measuring the metrics of that company? Evaluating that company on what basis? So that entire visibility needs to be there, and that business matrix is a key for the CFO advisory. But as a chartered accountant who comes for audit, or who comes for tax advice, or who is a advisor, very senior advisor in the company also for purposes that are told to him. So the communication is when asked by the client. Advices are narrowed to taxation or whatever is asked. Okay, vis-a-vis a CFO who is very, very strategically connected, who is, including major transformational projects, strategic initiatives, financial value creation, optimization. It is linked with the business, and it has a very effective communication almost online with the business. We are involved in decision making that's impactful. Okay, so this is a role, and I would, my answer to all the people who want to ask me that how do I get into a CFO advisory role, or we are already doing providing CFO services, but how do I get clients, how do I get more visibility? I would say that come to the right hand side, see that you are on the right hand side of the table, whether that is very, very critical. So I will go ahead. So the traditional responsibilities of the CFO versus how it's changing. Earlier, the traditional approach was, we used to do financial reporting, compliance and regulation, budgeting and forecasting, financial strategy. Now, are you saying that all these are not there? These all are also there, but we have much evolved from there now. The financial reporting is, considered as a regular work which could be managed by anybody other than the CFO. But the financial reporting, what impact it will have on your financial performance on business, this is very, very critical for a CFO to kind of summarize, kind of show the impact and everything. Compliance and regulations. Now, compliances are still there, but what I'm trying to say is that there are much complex, more complex based and global, because the world has shrank. Now what is the millennium definition? We all know that, right? Earlier we were saying that the next gen is, after every 10 years, a decade, a generation is changed. Now that has got again more compressed to 5 years. So we are talking about 5 years, as a compressed, next gen changing. So after 5 years, there'll be a new generation. So compliance and regulation now, because the global world has become shrank so much, we are able to, do business abroad, provide services abroad with a more avenues than what we had before. So every third or fourth company has a export. Every third or fourth company from there would have an office abroad, or the office abroad would have an office in Bombay. So the businesses have kind of become so complex. Like, I can give you just one example, that there is a marketing company. I have a client who is into marketing, and they are a US based company having offices in 56 countries. Now what happens is that they are not, of course, prevalent in all the countries including India, but they are taking certain services of marketing from India. Those marketing guys are giving them services, and they are using that services and making apps and giving those to all the clients all over the world, which will also include customers in India. Now India person giving services abroad, saying it is my export of services. After that export of services, that person is making an app and giving it to India as an export of services in US. So for India it will be import of services. And by when it is giving customers in India certain level of services, it wants the Indian companies, its Indian suppliers, to give to Indian clients. So now the Indian suppliers are giving certain services to Indian clients on behalf of the US company. Are you able to see the level of complex regulatory transactions that one has to view in this? And so what I'm trying to say is that the compliance and regulation is TDS and GST, yes, but it's much beyond. And a CFO is supposed to, kind of, in this complex risk-based environment, in this global environment, City has given us so much of opportunity. We need to see it in a much more risk-based method. Budgeting and forecasting. Now, budgeting and forecasting is also very important, agile and adaptive to multiple scenarios and interactive. So, budgeting and forecasting earlier was, once in a year we used to do the exercise, and kind of every month we used to review the next month whether the forecasting is correct or not, or if the budgeting was a little haywire, we would do reforecasting. But now, because of the scenarios, especially after post pandemic, and the way the digital globalization world is happening, what is it required is that the budgeting and forecasting need to be very agile, adaptive, multiple scenarios, and more interactive with the business. Okay, it no longer can be a static one. So it has to be very interactive with the business people, marketing people. Everybody needs to know what money I'm putting in marketing. Is it going in what regions? Is it going? What region economic scenarios are there? If that region economic scenario changes, if the dollar rate changes, what will my business decision be? What would be my budgeting change? What would ensure that my bottom line is maintained? What would ensure that my top line is maintained? So lot of permutations and combinations are there. So what I want to say is, well, budgeting and forecasting is there. It is very adaptable to multiple scenarios and very interactive. So this is the role of a CFO. Financial strategy. Now we always had a financial strategy, right? Every chartered accountant, every CFO would give a financial strategy. But now that financial strategy is like a strategic partner to all the business heads. It's no longer constrained to financial. It is a strategic partner in all your technological advanced decisions, in all your investments in advertising, in all your investments in fixed assets, in all your investments in growing the business. So innovation. So a strategic partner is, somebody who is in sync with all the other business heads across the company. And as I said, as a co-creator. So how do we articulate the role of a CFO in a business and impact to all stakeholders? Okay, you connect all the strategy to the numbers. All the company's strategies, you connect it to numbers and communicate in a language that makes sense to the investors. Okay, so strategy and vision, drive profitability, maximize efficiency, capital growth, strategic business partnering, digital transformation, global business. We'll talk about more of this in the coming slides, because this is something what we are already doing. And I just wanted to put it on a framework of how do we articulate a role of a CFO. But let's go ahead. So, friends, this is what I want to really emphasize on and spend some 2-3 minutes more on this is what is the landscape of opportunity for all of us as a chartered accountant, whether we are doing in practice, whether we want to have our own CFO consulting firms or advisory firms, and also whether if we are working in the companies. So, India is ranked fifth in the world's GDP ranking in 2024. Friends, there cannot be a better opportunity to seize the opportunity in the market. India is at a very good level in the global scenario, and its GDP ranking has come fifth. The nation capitalizes on the youth, on more urban coming to rural, on the adaptable labor force, young labor force it has, the technological advancements that it has done, especially after demonetization, the digitalization that has taken up in India, including the UPI payments that India brought up, even the world is copying it. The achievements in fintech adoption we have got 112 unicorns. We have, the best of, so now, and with the gift city coming in, the international currency trading and all the global markets have thrown us even more opportunities. Okay, we are able to invest in any country from India in Indian rupees. I think this is one of the very large developments that has happened. And as you all are aware, that latest Nifty 50, it has have evolution of an exceptional growth. Forget the last 2-3 days of drop that has happened, but still I have included this figure that Nifty 50, nobody thought that we will cross this much. So what I'm trying to say is that we are in a very good landscape of opportunity, and if we grab this correctly, then we will be able to really show our professional excellence. So what is the landscape of opportunity? We have 300 crore plus registered MSME. Addition of startups are 1.43 lakhs and registered with DPIIT. We have 112 unicorns in India. We have rising middle class affluence. We have technology adoption at its fastest gear. Rising internet penetration in urban areas and reach is become wider. So, your businesses are also grown up. Other digital expenses, you can penetrate more because of the internet penetration there. You are able to get labor job workforce at areas in tier 2, tier 3 cities because now internet is available there. With rising exports, you are at a best position to manufacture. Gift City has given us a very important perspective of a lot of trade opportunities. Rural economy upsurge has happened. So, friends, we are in a very good situation. And, from here, India can only bright and shine. And this phase in which we are today is one of the very best phases. And I would request all of you all to take an, very good opportunity of that. So now we come back to the portrait of the future CFO. What are we talking about? So we are talking about the portrait of the future CFO. The role of the CFO has been expanding. CFO is portrait of the future CFO. What is the portrait of the future CFO? Is, as I told you, that there is a dynamic of role that's changing: agile strategic planning, leadership and culture, digital enablement. So agile foresight, inspirational leadership, digital dexterity. So what does it all mean? It means, as what I had already explained to you, that you need to strike a very careful balance of the long-term preparedness for unforeseen disruption and short-term needs. I'll give you an example of that, my dear friends. Is that earlier when we used to establish the business, things used to not change so often. So it was very easy for you all to predict that, okay, in this domain, this life cycle of the product journey where I am going to enter the business, this is the competition I have, this is the business, these are the margins, this is my cost, these are my sale price, and this is what I will earn. But today's dynamics is not the same. Why do we say so? It's because the customers' preferences are changing so quickly. We are getting quite influenced because why? There is a lot of internet reach. World has become shrunk. So earlier, whatever trends were happening in the other countries, it used to come over here after a decade or maybe after a few years. But now, today, if there is a fashion show in UK, the pictures would be flashed in the social internet, and by evening you all will be having on your mobiles of what the fashion was, what the thing was used, whether you are liking it. So immediately there is a customer whose aspiration has now changed from something he was going to buy in the morning to something that's available to him in the evening. So what I'm trying to say is, this was a very common example that I gave you for you to understand that this happens in our daily life. Now with businesses also, there's a lot of things. Just take schools example. Education, the way it is changing, I mean, we cannot even imagine. Okay, so there are few educational institutions where I cater my advice, and you will not believe it dramatically changing, because we have always thought about institutions where we would go and study, and even as recent as the pandemic, before pandemic. But after pandemic, things have really changed. People don't want to go to the college to study. The college people feel that it's okay. So there are educational courses, including IIM courses, which they are giving the graduate degrees by doing online courses, by doing education, attending the classroom in the online virtual mode. So you need not go to the IIM campus. You can, study from within wherever you are. You are in Uttaranchal, you are in Patna, you are in Abu Dhabi, you are in Cochin, you are in whichever part of the world. You can just attend IIM and take the degree if you qualify. Of course, they have examination parameters and everything, but I mean, see the amount of educational changes that have happened in the educational area also. So, how does the institute cope up? How do they keep in pace? Do they create a lot of digital videos of the professors? Do they, give away their trait of speciality? How do they ensure that their, professors, this is not copied by others? So there are a lot of challenges that come in. And as a CFO, you need to really be with the business to think about all the risk angles that are happening and how they would kind of make it into opportunity. So all the threats can be converted into opportunity by doing a brainstorming and bringing your financial expertise in the business, so that you are ensuring that the business is risk, how much less you can make that risk. So it's kind of a very inspirational leadership, I would say, where you constantly motivate as a co-creator to all the other leaders of the department, saying that yes, this is achievable, let's do it. I mean, let's think about ways, because you are an expert in your area. But if you brainstorm with me, I can also tell you what my perspective is, and let's summarize it into a very conclusive, actionable point that could be useful for the business. So this is how a CFO will vary by providing inspirational leadership, try to ensure that it is giving a measuring purpose to the business. Even digital textatory. Now, everybody is hearing digital, digital, digital. But what is digital? So your business, you need to develop digital capabilities. So every business will have different digital requirements. Okay. So whether it is an e-commerce company, or whether it's a pharmaceutical company, where you need to have your own website, where you need to from a B2B model go to B2C model, whether you are in your B2B model also, whether how your procurement can digitalize. You earlier had a warehouse and a godown where everybody used to bring stock, and you used to make challans of delivery over there. Now it is a digital world. In a digital world, all the staff that was sitting in your warehouse no longer required to sit in your warehouse. You can give them a digital platform of web login. Each supplier will log in, will there will be a PO that you have given him, purchase order. He will fill up the requirement against that purchase order, that you have ordered for so much, today I am bringing so much, and he will say submit. As soon as he submits, a consignment number will be generated. That consignment number will have a time and date. He will come on that time and date, and against that consignment deliver. So the warehouse will have to only now physically confirm whether the what it has received is correct or not. and all the records are already digitally there. A digital delivery challan automatically gets digitalized. No need of printing. It is shared with accounts online. So accounts also gets that this stock has been delivered. The warehouse manager says okay. Okay means he has also received it. As soon as the warehouse manager says okay, it is added in your stock. Then from there the distribution team sees it. So the distribution team will take the sales orders. The sales orders will also be received digitally. They will also be all will be, if it is B2B clients also, they will all be given a login. Even the B2C nowadays do login, and they will place their orders. All those orders will digitally come here to the company, and you will digitally say the stock will get dispatched. The dispatch note will be delivered, and the client will be digitally signing it and accepting okay. So your record is complete. Everybody has got everything. Your invoice has gone in between. Finance has generated the invoice. So you are seeing the amount of digitalization now, in which finance has to create an invoice also. There is a thing that once the stock gets confirmed and everything, a digital invoice comes in place. And then once account says okay, it gets passed on to the client, and it gets emailed that saying that your so much stock has been dispatched, and this is the invoice pertaining to that. So see the amount of digital textatory that we are dealing in. I wanted to give you all an example, friends, so that it is just not a theoretical thing, but you all are able to understand the dynamics of where we are coming from. So many things are just getting changed. So how the CFO space is evolving. Just now I gave you all an example. Digitalization. Okay, now you all are understanding all these diagrams of this round is there. So, what are all these signify? So do we have any questions?
Yes, ma'am. Few people have some questions to you. If you allow, can I start with the questions?
Actually, okay, just give me 5 minutes. I'll conclude this and then we'll take the question answer sessions.
Sure, ma'am. Sure.
Okay. So digitalization and network of data connection, cloud computing, data-driven decision maker. See, what I'm trying to tell you is, friends, uh, do not get too much concerned with the big names that are going on. As a chartered accountant, earlier we used to make flowcharts or no. When we were in our work session earlier, when we 1999 also, I remember 2000 also, we used to always draw a simple flowchart. At that time, flowcharts were also a very amazing thing, because a customer would come to know, client will come to know, or our company will come to know what is the process from one end to another end. Okay. Now digitalization is nothing but the same flowchart, but now it is on the digital area. Okay, so it is technology driven. Fine. And I agree that a lot of live cases need to be sensitized to you all to understand how this digitalization will work. And technology advocate, as a technology advocate, CFO people say you are a technology advocate. What is the meaning of a technology advocate? Is you are somebody in the company who will also acknowledge and put your contribution in the technology advancements of the company, like whether your cyber security shield, cloud computing, networks of data connection, data driven decision maker, all this. So now, because we are having so much of digital assets, of course, friends, you are aware that we had warehouses. I remember in my earlier company, we used to, because we were in retail, we used to take godowns and godowns of for file management. And then finally I said, no, this is not done. So we hired a company. TCS was into record management. So, one of their companies said, okay, we do a lot of record management. So at that time, they would digitalize for us and they would save it. So whenever we need it, we'll have to just click the year and then they'll give us that in a digital form. So from a physical file to the digital assets, we saw that journey. But now, because the transactions itself have become on a digital mode, all those data are so critical and important for us. So that is the reason why then there is a cloud database computing, cloud computing. What is cloud computing? It is nothing but arranging your digital data and getting it to a place where you are able to virtually accesses at a time when you require. It is a backup. Okay, but it is all in a digital form, and it is a storage. It's a digital storage, because now earlier you needed warehouses, now you need those digital, because all your purchase vouchers would be in that, all the your bills would be attached on your technology vouchers, so everything would be on that. So this is why the CFO space is evolving. Friends, one more very important new thing that's coming up is sustainable finance. The environmental, social and governmental considerations. So I would like you all to see this video because we don't have much time now.
ESG stands for environmental, social, and governance. You can think of it as an analysis framework to help measure and quantify the degree to which an organization is operating in a sustainable manner. Environmental assessment criteria help stakeholders understand an organization's impact on the environment and the climate, like its greenhouse gas emissions, and its management team's stewardship over natural resources, like fresh water. While understanding environmental risk and impact is a big part of the ESG framework, the concept of sustainability in this context extends well beyond.
Sorry, friends, I'm not showing you all more because we are running out of time. So, the emerging responsibilities of the CFO is risk management, mentoring as a finance advocate. We are a mentor to a lot of our own finance team as well as others in the company. Complex regulatory requirements is throwing us challenges, as I mentioned to you, global transactions. We need to be agile and adaptive. I would only say that these are very critical, and this would help us to stay ahead of times. Okay, how much time do we have? We have spent, we still have some time. Can I go through one case study with them?
Sure, ma'am, you can.
Okay. So, friends, I know many of y'all are saying that we do not have, where will I get training? Because of this same question that I'm getting from so many chartered accountants, I am very soon going to start a CFO mentorship program, and I will let you all know about it. And it will be able to cater to everybody's needs. We'll try to calculate a program whereby we can use our own members and also myself, and we will see how we can, more and more make this available. And I'll take you all through this case study, which will make you all very comfortable. What you all are asking for, you all will get here the answer here. That while I'm telling a lot of PPT and pictures and digital words, but how in practical sense we are dealing with it. Okay, so please be with me in a very attention way for 5 minutes. See, a company in Delhi, okay, it is in service industry. It's very successful and it has a business since 15 years. Now it has started a new venture 2 years back. Okay, because his son has come um, into the business. He started a venture which is a very 2-year-old company into manufacturing, processing, and selling spices, premium green tea, ghee, and from Himalaya, mainly on e-commerce platforms, including its own website, and is also having corporates, retail, and other channels for sale. Okay, have you all understood the background of this case study? Okay. Now they approached a CFO advisory firm with few questions. We do not know if our new venture is profitable. I do not have visibility of its performance. Which channel is working for me? Should I continue to bootstrap or raise money? So these are the general promoter questions that will come up. Okay. That, what is it that we need to do? Now, as a CFO, we what we would do, we will go through all the business facts, and on the highlighted facts we have said that okay, the packing cost was almost equal to raw material, no inventory was maintained of the packing material, losses in the packing was higher than the benchmark, freight cost for raw material was very individually and separately seen rather than seeing it jointly with the raw material cost. Okay, and maybe one two three more things, that product was going on sample, it wasn't accounted correctly, raw materials that needed no processing directly to be added to end product were going to manufacturing hub and coming to their central hub. So this is something like a logistic. They are showing that some raw material should have, instead of coming somewhere, it was going somewhere and then again coming, so it was having a dual transportation cost, so there was a process for gap. Then there is a cash flow efficiency matter. So, friends, these are all which we regularly do in audit, and you all say, okay, yes, we also get these audit queries. Now, as an action of the CFO, what would be the first approaches? that it will arrive at a unit matrix table. How would you measure your unit of sale? Based on that, you will get that these are my unit matrix. Okay. Now, what is unit matrix definition? Let me tell you. In this case, the unit matrix is the T that they are making. Okay. Now the T also, how would you measure the T? So it will be per gram cost. So if 100-gram packet is there and 1 kilo packet is there, the raw material per gram would be multiplied into the raw material costs. Okay. And said that this packet of 100 grams will require this much. This is the sale price and this is the cost, all costs associated to that 100-gram tea packet. So this is the unit matrix that will come out. Okay. Now the supplier supervisor at the factory hub will be responsible. So we will say that your wastage will not be beyond 1%. Your freight cost and raw material cost cannot be looked at separately. Whatever you are acquiring, including your freight cost, has to be added and then done a comparison. If you do a comparison after that, maybe your decision for a supplier may change. Your freight cost will go down. Your wastages will reduce. Your gross margin will improve. So, what is the action by the CFO? Cost of the goods are on sample should be accounted in marketing cost at zero cost. Then some of the part of raw material that needed no additional processing were called direct in the central hub. So the process flow was corrected. Because of this, there was a reduction in freight cost. Manufacturing cost went down. Your product cost went down. Your gross margins went up. Gross margin was reflected correctly. Results in gross margin were improved by 15% because your cash flow from supplier was mapped to actual credit days. So, some suppliers were paid earlier than where they should be, and certain other issues in cash flow will make your cash flow more efficient. But, friends, all this we are doing, and this is a role of a CFO, getting into the business, understanding, and doing. But, friends, as a dynamic CFO, now what is evolving is not only this much. Okay. So now it is saying that everything what we spoke about in our PPTs. So it will say that, are you making your decision making only based on the static raw material cost that you are having right now? Are you taking the decision making of a raw material only based on the raw material cost and the freight cost that a supplier is giving you? Or your decision, because your raw material cost is going to be a huge impact to your business, so the more business, the more raw material cost. So it's a very important and ingredient part. Capital asset business, where capital assets are very huge and they are very important. So the decision of buying and at what price is very important. So there is not only one input, there will be vendor ranking, whether this vendor, then there will be vendor payment terms. Some vendor is asking advance payment, some vendor is asking money after 60 days. So have you counted the cost of opportunity of fund costing is also very important. Then some vendor we are importing, but that same goods we are getting by your local. So should we import, should we do local? Now when I'm doing imports, I'm getting certain benefit of fund. I'm able to discount the bill at a dollar rate, LIBOR rate. LIBOR rate, because in that country, the bank of that country will lend to your supplier money as soon as the bill discounting happens, but that country's rate is very down. Their cost of capital is very down. They don't give interest so much as India gives. So if you borrow from here, your interest rate will be higher. But if you import, you will get the benefit of that. So now, are you understanding that we only saw that, and it was a very good observation that we saw raw material, we saw freight cost, we added them, the supplier decision changed. But are we seeing the dynamics of what is the ranking of the supplier? What is the probability and risk that the supplier will not deliver to us in the given time? Are we keeping a buffer? Because if some risk suppliers are there, order is always given 15 days before the actual date. So are we blocking our working capital? Okay. What is the ranking of the supplier? What are the dynamics of export and local purchase? What is your fund capital by doing that purchase? What is the digital convenience that the purchase is giving you, because of which you will be able to save on your operational cost? Because I still remember that we had vendors who would say that, I would rather not give to that company because it has so much of paperwork, that I would rather give it to y'all at a, lesser margin, but churn my portfolio for 2 to 3 times so that I can earn better profit. Okay, I don't want to do, I will do one transaction with you. In that time, I will do two transactions with somebody else. So all these factors now come as a data point, and a CFO's dashboard is becoming so interactive that all these parameter of cost of capital, cost of funding, ranking of the probability of risk in this case, and what is the probability of risk for us as a business, that we may not be able to do the business, we may have to lose it if we don't get the raw material on time, or we may have to call for the raw material 15 days before. So if there is any, if we are saying that I want to import from here, what are the regulatory challenges that are happening? What are the complex compliances that are taking place? There are two countries, I have a choice whether I import from here or I import from here. This country is giving me a little lesser price, this company is giving me a little expensive price, but the economic conditions suggest that there is a high probability of this country getting into a little more trouble than this country. Should it be more smoother? Regulatory compliances, are they getting more to me? So many different parameters and measurement sets are there, so it is not one, but slowly as you get into the practical world, you, my friends, you will start getting and able to join the dots. I'm just saying that don't get too applauded by what it is. It is just that you'll have to start joining dots. Decision making based on data sets. See, this is how the decision making will happen. Whether the geographical location, what the delivery risk, whether the complex regulatory requirement is there, what are the payment terms, additional funding cost, what is the probability of risk. So all these parameters, I've just included little, but actually there are many. But then just to make it simple, I have included so many that these are all very critical to your business decision making. And once a CFO advises to a company, the profit growth happens by way of cash flow efficiency, by way of margins getting improved, by way of getting more compliant and hence getting cost of capital at a very effective rate. Because friends, that we are in the world of now, the cost of capital is thrown out, like it is same for everybody, has to struggle for the cost of capital. So the more corporate governance you are, more you are transparent, the more you will better get funding. Your cost of capital would be lesser. So thank you, and I'm happy to take questions.
Sure, ma'am. Ma'am, there is Khushbu Dattani from Ahmedabad. Am I audible, ma'am?
Yeah, you are audible.
Hmm.
So
Can I start with the
yeah,
questions?
you can start, or should I only read it, or how is it?
Ma'am, I'll read it and you can answer them.
Yes, okay.
Ma'am, there is this Khushbu Dattani from Ahmedabad. She says that she is a CFO of a startup. So there are a lot of things in her bucket. So she's not able to focus on the technical side of the tax audit, and she's not able to delegate the same also. So she's saying whether am I right or wrong, or how should I execute with the same?
See, Khushbu, I understand your role, and I appreciate that. And don't worry, you are not the alone person out there. There are a lot of people, and the company's mentality. Sometimes you are wanting to grow, but the company in which you are, or the promoters you are, or the environment you are, they are still not in a completely grown phase. So they are in the era of, okay, a chartered accountant whom I have hired will do all my compliances, all do these things. But what I would suggest to you is, the best way to balance it out is that try to give all your regular work, try to keep resources who will be able to do it. I know it is challenging to get resources, but try to sublet whatever work you can, which you feel is a very regulatory and which you already know about it, and you already have the expertise. Whenever you want to go back to it, you will be able to go back to it. Your only way to grow yourself, and for that you need time, is to free yourself from the regulatory part of this regular compliances that are coming up, and somebody to give you at least a ready-made information of the entire tax audit form, and then you kind of only enter into where there are any discussion points, and kind of present that to your audit, to your client, your startup advisor. So delegating the same is, you are saying, yeah. So you are absolutely right. You'll have to delegate it, Khushbu.
Ma'am,
Can I
can you
have another
proceed?
question? I hope I
Yeah,
have
sure.
answered Khushbu's question.
Yes, ma'am. So, ma'am, there is Savita Mantri from Mumbai. She is saying that the workload in CFO service is too much as compared to advisory, as it is inclusive of various services. Whether in terms of remuneration, clients ready to pay that much? Because our experience is that client is always on the side of paying less remuneration.
See, that you will find in all the professions. Now, there is a haircut salon. That haircut salon is having a person for 100 rupees, it will cut your hair. And they say that if you want an expert, you will have to pay 400. But if you
True.
want a real expert, you will have to pay 900. And if you want the owner of the company to do it, it will be 2000. So now it is on the client whether he wants to get a 100 rupee haircut, 400 rupee, 900, and 2000. Unfortunately, in our profession, what has happened is that every alternate CA who is in practice is saying that I'm a CFO, virtual CFO. Because I showed you the landscape of opportunity, they are not wrong in saying that, because so they are seeing so much of opportunity coming in that wherever I'm also going for my advisory services, there has been years where the CA has worked in a very small amount, and when they see my bills, they will think that, oh my God, Falguni madam is getting so much. I also want to get into CFO advisory. Next day, they will come and meet me. Madam, we also want to start. We have this firm with so many years experience. I said, I respect all of that. In fact, you guys are in service more than me, because I am not in practice. I'm in practice only since 3 years. Plus, I don't know anything about CA practice traditionally, because I've always come from an industry background. So everybody wants to become a virtual CFO, but I first tell them that there is a complete mindset shift that you all have to do, okay? And once you are able to deliver that to your client is able to see it, because so many CAs are now reducing cost. Like, I'll give you an example. If a CA is getting per year audit fees of 1 rupee from that company, and if that company is paying me 100 rupees, what they will do, we will also do what Falguni madam is doing, and we will give you in 20 rupees, in 30 rupees, because for them it is 3 times the cost.
True.
For them it's 300% increase. They are saying, ma'am, we were getting 1 rupee, now we are getting 30. But you have to understand that industry experience is not the only experience that we bring to the table. There is a complete mindset shift, which I told you on the table, which I showed you. You have to be on the right hand side. And unfortunately, the clients would want to will only be able to see that when it will experience and able to see. But I would only suggest one thing to the people there, is that do not compromise on the quality of work, and you will find those. Please find the right set of clients who will be able to rightly pay your fees, and you will be able to deliver them what a CFO would. And there are payers. Let me tell you, there are payers in the market who understand that what is the value of a proper CFO advisory service. So do not worry. There are many, and the amount there is quite good. So I hope I have answered your question.
Yes, ma'am. Ma'am, this is just an appreciation note, not a question. So, Savita Mantri is saying that your lecture is very informative, but as a women chartered, we don't get proper training session to update ourselves for the various challenges which comes in CFO services. So there should be a platform which help us if we stuck somewhere while providing the services, which is missing. So she want that institute should, mentor that. And actually, you already said in the this thing that you are focusing on
Right.
introducing CFO mentorship.
Because
So
I saw like a wide gap, I'm seeing
yeah,
wide gap in this. And I think I agree with Savita, not less. It's just that priorities were a little this. So I agree with you, Savita, and I think that more and more of such things will definitely evolve in the market. And I'll also try to do my best to see that if I can bring this as quickly as possible.
sure, ma'am. This was the questions from our people. Do you have anything to say, ma'am? Else?
I would only
Do you
say
want to
one
add
thing that,
something?
Yeah, I want to just say that once a woman CA, always a chartered accountant. Keep faith. The CA journey, the CFO journey, there is a lot of fees in this. That is, there is avenue. Clients will be willing to pay. Search those clients who are ready to pay your value, and do not cutthroat and get into cheaper assignments, because once you do that, then you are not able to deliver, and that's more frustrating. uh, as a woman entrepreneur, as a woman person, I would always say that we already have a natural zeal and passion about doing a lot of things. And I wish you all each a very, very best. And I hope that my session would twinkle something in you which you were looking for when you attended this session. Thank you so much.
Thank you, ma'am. Thank you, Rajeshri, ma'am, too. So just to end this meet, I would like to have a vote of thanks. So on behalf of our Women Members Excellence Committee, I would like to extend our heartfelt gratitude to Preeti ma'am for conceptualizing and initiating the Yashashwini series, a truly commendable endeavor. We are also deeply thankful to our esteemed speaker, CA Falguni Gandhi and CA Rajeshri Mundra ma'am for sharing their expertise and enlightening us with their valuable insights. Last but not least, we appreciate each and every one of you for taking the time to join us, making this session a resounding success. Your presence and participation make our initiatives truly special. Thank you once again all for participating in this meeting.
Thank you once again to Preeti Savla. I'm really very impressed with the entire Women Excellence. As a chairperson for Women Excellence Committee, the way she has, brought the entire woman power and force together, it is really commendable. And I wish all the best to her and to the institute in this endeavor.
Thank you, Yamini,
Thank
so
you,
much.
ma'am.
Thank you, everyone. Thank you for your appreciation and giving me the opportunity for being a speaker.
Thank you.
Yes. Thank you.
Thank you.
Thank you.